Hi everyone, welcome to Kotak Chatroom presented by Kotak Securities. मैं हूँ आपके साथ इंदु चौधरी. Today we will focus on another upcoming IPO of Fedbank Financial Services Limited. Joining us to discuss more details about this IPO is the MD and CEO of Fedbank Financial Services, Mr. Arun Kothuri. Mr. Kothuri, welcome to Kotak Chatroom. Thank you for taking the time out to be with us. So to start with, could you please give us an overview of the company, its business model, and the objective behind launching this IPO?
We are an NBFC called Fedbank Financial Services Limited, or FedFina for short. Okay? We are owned 73% by Federal Bank, which is an old private bank about 100 years old, and True North, which owns about 23%. True North is a private equity company. Okay? Our mission is to empower emerging India with easy access to loans. That's the reason we come to work. This means we cater to the working capital needs of the small self-employed customer. And we do this in three ways. We either take pledge of property or pledge of gold, or we do unsecured loans. Those are the three primary lines of business that we have. As of March 23, we had an AUM of 9,100 crore rupees. We've been growing quite rapidly over the past few years. Okay? From 21 to 23, our AUM has grown from 4,800 to 6,200 to 9,100 crores respectively in those 3 years. Whereas our profit after tax has grown from 61 to 103 to 181 crore rupees. And our return on equity has gone up from 8.4 to 10.4 to 14.2%. So our size, profitability, and profit have all been increasing over the past 3 years. So we last raised capital in the year 2021, okay, when our AUM was just shy of 5,000 crores. Since then, we've doubled our AUM. So obviously we need a little more capital which we can lever and increase our AUM. Our current capital adequacy is at about 19ish%, and the primary fundraise of 600 crore rupees is designed to augment that. As we get more capital, we will be able to then raise more debt and increase the scale of our operation. That's the reason behind this capital raise exercise.
So could you please help us to understand the average ticket size of different segments of your loan book?
Our typical customer, he earns 5 lakh rupees per annum. He lives in the periphery of large cities or in tier 2, tier 3 towns. He has his own business, and what he doesn't have is access to formal finance. He also doesn't have formal financial statements like profit and loss accounts or balance sheets that he can use to evidence his financial stature. Now, what FedFina does is to approach him, understand the size and scale of his business, the appropriate loan that is required for him to conduct his business a little more efficiently, and that he's comfortable repaying. And we go and do that loan for him in a quick and comfortable fashion. That really is the heart of our business model. We have 575 branches across the country where we do our business, and this is spread over 17 states and union territories.
So at present, what is the overall size of your loan book, and what is the status of NPAs and provisions?
Our retail GNPA as of March 23 was 1.5%. And with this segment, you realize that while some of their cash flows and hence repayments may be a little irregular, but they invariably catch up and come back onto track. The variability in their repayments is really a function of the variability of their own lives and the cash flows associated with their professions. So that's as far as the portfolio quality is concerned. Our cost of credit has been declining year after year, and in the most recent year gone by, it was about 0.6%.
So within the different segments of the company, which segment is outperforming among all the verticals of the business?
So we started off small and we are growing rapidly. So obviously, given the small base that we started off with and the attractive target market that we address, there has been rapid growth. Okay, and all these businesses are high yield businesses, so therefore they may earn a lot of money for the company. Also, our cost of credit or portfolio performance has been good. Okay, has been in the upper quartile of the industry in each of these products. So all the products do well for us, but in terms of salience or in terms of percentage of the overall business, I think the small mortgage business is going to dominate the portfolio, because once you originate, it stays on the book for about 8 years, whereas something like a gold loan runs off in about 4 months. So therefore, the portfolio in future will be dominated by small mortgage loans.
Okay, so small mortgage loans में so how much percentage this segment is contributing in total revenue?
So small mortgage loans, जो है, they are at a portfolio yield of about 17%. Unsecured loans are at 17.3 or so. Gold loans are at about 17.75. Okay. So what has happened is that as a proportion of the total, the share of small mortgage has been increasing. Okay. So that's the point that I made. So, and that trend is going to continue in future.
So if you look at the company's expansion, the growth for you is highest amongst your peers. So are you planning to keep this pace of growth? Is there any particular geography that you are particularly targeting now as well?
We had 575 branches in March 23. That number is now up to 585 as of June, and it's increasing. This is across 17 different states. We are reasonably penetrated in southern and western India, okay, whereas our presence in North India is skeletal. So the future expansion that we will see will, enrich our presence in North India. That's the foreseeable future before we foray into other parts of the country.
How do you see the demand of this small self-employed segment?
Oh, the demand in for loans in the small self-employed segment is high. It is growing, and it is unsated at this point in time. Okay? It is estimated that only 20% of the demand is actually catered to by formal lending institutions, and the remaining demand just goes a begging. People make do with either a lower amount of money or through informal borrowings. So the demand is high, and the number of institutions catering to this segment is low. Okay, so all that is required is that we cater to that demand through our different branches and take advantages of the opportunity afforded by the environment.
So do you have any plan to expand or invest in technology to upskill the company's digital presence?
So technology these days is table stakes. Every company, has to be at a certain level of technological deployment. You need to have a system, for your business. You need to have workflows enabled. You need to have decision rule engines. You need to have analytics. You need to have collection support. So those are all now table stakes. Okay. As far as our business is concerned, it works through a combination of human interface, along with technology. Okay. While our customers, are financially illiterate largely, the process of originating them as well as underwriting them has a huge human interface, where we actually visit the customer's premises, we assess his turnover, we estimate his profitability, and work out his loan eligibility on that basis. So there's a huge personal and physical component of this whole process. Equally, once the customer's on board, technology takes over, and customers use technology to keep in touch with us. Okay. About 2/3 of our customers are on the FedFina app. 40% of our repayments and transactions happen digitally. Okay. So this is for the gold loan side. Installment loans, it is electronic repayment where everybody repays electronically. So technology is an inherent part of people's businesses, just as it's an inherent part of people's lives, and it is table stakes right now.
So as we talked about upscaling the technology and digital presence, do you think that lack of awareness is one of the biggest challenge for this sector?
Absolutely. The battleground in our times is for the human mind. The human mind is exposed to so many elements, and finding what you need at the right time is the biggest challenge. Equally, for companies, reaching out to the customer who has that unfulfilled need is the challenge. Okay, technology helps a fair bit in that regard. Where customers can look on the internet and find the appropriate solutions that they need, and similarly, companies can find customers who have a latent or an expressed need for specific products. But ours is the information economy, and the battleground is for the attention. Yeah.
So, last question, what is the expected growth that you are expecting going ahead?
So far, what we've done is to embark on a spree of growing branches. Okay, we have invested heavily in our physical presence. Now, by and by, those investments have begun paying off. Okay, so while we've incurred the cost of each branch, putting people in the branch and the technology in those branches, the AUM per branch is building. So what is going to happen in future is that this operating leverage will play out. AUM per branch will increase, whereas the cost per branch will stay reasonably constant, adjusted for inflation. So owing to this operational leverage kicking in, we should be able to be a little more profitable with each passing year. That is the aspiration, and that is what we will keep chasing post the listing event.
Thank you so much, Mr. Kothuri, हमारे साथ कोटक चैटरूम में बातचीत करने के लिए. We wish you all the very best for your upcoming IPO.
Thank you for having me on your channel. Thank you so much.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.